Hey, what's up guys? I'm Cody Charnell, multifamily real estate broker here in Long Beach. And today we're gonna be checking out a recently closed triplex listing. My goal with these videos is to show you what's happening in our local market so you can stay up to date and make the best decisions possible for your real estate and investment portfolio. So just a little disclaimer before we look at the property. I didn't have anything to do with this sale. This is really just for informational purposes. So without further ado, let's check it out. All right, so let's start with the listing. So this is the property, 3 units. Property address is 2627 Magnolia Ave, and it's in the city of Long Beach. Total square footage is 2644, and that's split up between 2 different structures, which we'll take a look at in a second. Lot size is just over 6,000 square feet, so decent sized lot. So the description says, nice clean triplex in one of the nicest parts of Wrigley. The front building consists of 2 large 2-bed, 1-bath apartments, 1 upstairs, 1 downstairs. Additionally, in the rear there, next to the 2-car garage, is a 1-bedroom, 1-bath apartment. The 2-bed unit downstairs has been recently renovated and the roof has been replaced this year. Besides the garage, there are 6 parking spaces. So as we can see, this property was initially listed for $999 and it ended up closing for $950,000. I was keeping an eye on this property. I really like this neighborhood. I thought this was a decent deal. It went in and out of contract a couple times, but it did end up going pending within 22 days with the final buyer. So if we scroll down here, we get a little bit more info on the unit mix and rents. So they're showing 0 for one of the 2-bed units. So that's the one that's going to be delivered vacant. One of the units is, the 2-bed units is rented for $1,150, which is less than half of what you could be getting. And then that detached 1-bed unit in the back that's connected to the garage is currently rented for $1,200. So lots of upside in those rents. Something else that's interesting about this property is that there are only 2 electric and 2 gas meters. So what this likely means is that the front building has 1 electric meter that services the 2-bed units, and then there's an individual meter for that back building. And the same with the gas. So you can do a couple things. You can either cover the cost of the utilities for the tenants and charge a little bit higher rent, or you can implement something like RUBS, which stands for Ratio Utility Billing Services or Systems, one of the 2. Essentially what you do is there's an equation based on how many occupants, how much square footage their unit is, and they get charged a portion of the total utility bill. So either system would work in order to kind of help reduce the overall expense for the owner. But okay, and then here's some photos of the listing. So we can see, this looks like the upstairs unit. You can see they had an issue with the ceiling in the upstairs unit, and that's probably the reason that they replaced the roof this year. They have carpet throughout. It doesn't look like it's been totally neglected, which is good. Bathroom, it's got the original tile vanity and pub surround. Looks like older wall heater unit, which is fine. It also looks, okay, so it looks like interior staircase here maybe in this photo. Original kitchen cabinets, original tile countertops most likely. And wow, it looks like it has a big dining room and a really big living room, which looks like they may be using as extra sleeping area. So let's see. So one thing I'll often do is, in a situation like this where I'm trying to figure out the square footage of each of the units, you can look at the tax records, and the tax records will show you the square footage of each structure within the building. So let me pull those up. Okay, so here we are on the tax records. So down here at the bottom, it actually shows us the breakdown of square footage based on the building. So you can see building 1 of 2. It shows the gross area, so that's the total living area for the entire property. For this structure, you have 2202 square feet. So since one unit is upstairs and one unit is downstairs, they're probably almost identical in square footage. So that means each unit is about 1,100 square feet. So for a 2-bed, 1-bath, that's a ton of square footage. If I was buying this, I might try to figure out if I could reconfigure it somehow to add an additional bedroom, because for a 3-bed unit, you're gonna get a lot more rent than for just a large 2. So you could look at doing something like that. Also interesting to see is the square footage of the back unit. So 442 square feet for that back 1-bed, which is on the smaller side. Okay, so going back to the listing. So we saw the upstairs unit. This is a picture looking backwards. So basically we're standing in this yard here. So this photo looks back at that 1-bed, 1-bath unit. So a couple really nice things about this. It has its own private yard, and it's a freestanding structure. So it doesn't have any shared walls. So less noise for that tenant. Tenants will pay a premium for a detached unit. So even though it's smaller square footage, I think you could still get pretty good rent for this. And inside, looks like the bathroom is in pretty good shape. Not like totally modern, but it looks like it's been updated and well maintained at some point. This unit, let's see, it looks like it does have probably vinyl click flooring. It looks like. Living room, you have a little breakfast nook in the corner there, which is kind of cool. Small kitchen, but it looks efficient. It looks like the cabinets are somewhat updated. Nice kind of updated backsplash as well. And yeah, you can see, get a good picture of it there. There's also plenty of parking at this property. So somebody could look at renting the garage out for additional rent, or potentially converting it into an ADU, which would take this from a 3-unit to a 4-unit. So you do have that as an option. Okay, and then it looks like this is where it starts for the downstairs unit in the front building. So this one has been recently renovated, according to the description. So it looks like newer cabinets. It does have like the kind of butcher block countertops, which look really nice. Stainless steel appliances. It has that same, looks like vinyl click flooring that was in that 1-bed, 1-bath unit. Updated tile and vanity in the bathroom. And yeah, it looks like it's in really good condition. Okay, so now that we've seen the listing, let's take a look at the location. So the listing mentioned that this is located in the Wrigley neighborhood. So Wrigley is really this area right here, kind of on the west side of Long Beach, or towards the west side of Long Beach. West Long Beach is actually everything west of the river here, but this is pressing right up against the river. And some things that I like about this neighborhood in particular are you're very close to Cal Heights and Bixby Knolls, which is a really nice neighborhood. You have a lot of shopping and entertainment, not too far away in this area. The property is also very close to Long Beach Memorial Hospital. So somebody could look at renting out these units as medium-term furnished rentals. So traveling nurses are always cycling in and out of hospitals, and they always need places to stay for a few months at a time while they're in town. And this property is close to the Long Beach airport, which has lots of big space companies that have moved in the last few years. So you have companies like Relativity, Spin Launch, and a few others. So they're still developing new commercial and office space, kind of like big warehouse space at the airport. So I expect more companies to be moving into the Long Beach airport in the coming years. So having housing close to big employers like that is great. And then if we look at it just a little bit closer on neighborhood view, so Wrigley Coffee, kind of new trendy coffee spot, which popped up in the last few years. You also have Long Beach Beer Lab, which is a big brewery that popped up in the last few years. You have some thrift stores like Magnolia and Willow here, and some other restaurants and shopping on the street. So you're not too far from this stuff. And looking at the property on street view, you can get an idea of what the neighborhood is like. So here it is. This is our our duplex in the front. So the renovated 2-bed unit downstairs, unrenovated 2-bed unit upstairs. We can see the back of this building here. So you have 1, 2, 3, 4 driveway spaces there. And then it looks like they're using that as a space and this is a space for the total of 6 parking spaces that they mentioned. You have the 2-car garage. This is the 1-bed unit and its private yard. So we can see, yeah, actually it looks like there's a space for a 3rd electric meter. So I'm curious why that hasn't been added, but something that I would investigate if I got this one into contract. And let's take another look at the neighborhood. So this section of Wrigley is mostly single family and small multifamily. So you can see, it looks like mostly houses kind of along this major street. And yeah, really an attractive neighborhood. It looks like people are taking care of their homes. Overall, I really do like this area. All right, so now that we've seen the area and we've checked out the listing, let's plug in the numbers. All right, so this is my pro forma for this property. Right now we're on the inputs tab. So this is where I would come to plug in all of the property details. So I've already gone ahead and done that. We have the purchase price, it closed at $950,000. We have some building details. I'm including a renovation budget. So we already have a new roof and one of the units has been updated. It looks like that back 1-bed, 1-bath unit is in pretty good condition already. So really the only unit that's gonna need significant updating is probably the upstairs 2-bed unit. So for that one, I'm going to estimate, let's say $30,000 to be on the safe side. The downstairs unit that's been renovated will be delivered vacant and that back unit will be occupied. So in addition to the renovation costs on this one, you're also gonna have to figure out how to get the tenant out. Best options right now are either cash for keys or serving a substantial remodel notice. In the city of Long Beach, you have to pay a minimum of $4,500 to relocate a tenant. So we can add that to the budget for that 2-bed unit in the front, and then let's say $5,000 maybe as an offer for cash for keys in that tenant in the back to try and just get them to move so that we can re-rent it at market rent. So that brings us to $39,500, which I think is a decent estimate. If I were to get a property like this into contract, I would adjust this renovation budget after I've finished inspections. So once you know what this property is going to need, this number might go up, it might go down, but I think this is a safe estimate just as a starting point. For financing on this one, we're using a 6.875% interest loan, and we're looking at it with a 30% down payment. Now I mentioned rents on this one were pretty low. So this 2-bed unit is the vacant one. So we're gonna put in market rent for that unit of $24.50. We're also looking at current rents of $11.50 and $1,200 for the other 2 units. If you were to get those up to market rent, I think this is probably what you could get. So $24.50 for the 2-bed units, $1,800 for the 1-bed unit, and then I'm adding an additional $100 a month for the 2-car garage. You could probably rent it for a little more than that, but that's a safe estimate. So now going over to the summary tab, we can see what this one looks like. So at a price of $950, it's priced at 16.5 times gross based on current income. And since this has so much upside in rents, the number that I would really focus on is the market gross rent multiplier. So we can take this from 16.5 times gross all the way down to 11.6 times gross, which is not bad, especially for an area this nice. If we keep going down, we have our initial investment. So this is our 30% down payment, closing costs of around 2%, the renovation budget. So it looks like all in on this one, we're right under $350,000. You can see our operating expenses down here. So we include expenses for taxes, insurance. There's a repairs and maintenance budget of 5% of gross rents. There's also a property management expense here. So If you were to buy this and manage it yourself, you could save that money. There's a utility expense, which this estimate is really probably closer to what you get for a property that's individually metered for gas and electric. So you may want to update this number once you get the actual expenses when you're in escrow. You could keep this expense the same and estimate a little bit higher market rent and just assume that you're going to include utilities in the rents when you do re-rent these units. Or you could implement RUBS, and then this expense could go away entirely. So different things, different ways you can analyze this. There's also an expense for gardening here. And so we have financing up here, which I kind of skipped over, but monthly principal and interest payment is about $43.69. And then this section shows our cash flow. So gross rent, we don't have a vacancy expense here, but that's okay. Less our operating expenses, less our mortgage payments, and it shows this property is going to be negative if you just leave it alone and don't increase the rents. So this property most likely sold to somebody who's planning on turning over those units and getting rents up to market quickly, or somebody who put a lot more money down. Once you do get it up to market rent, it would cash flow about $13.66 per year based on my estimates. But again, that does include vacancy expense, repairs and maintenance, property management. So if you do back out those expenses on a monthly basis, there might be a little bit better cash flow. But I think the real benefit with this one is the value add potential. So in this neighborhood, I would expect that you could sell a nicely renovated triplex that's getting top of the market rents for at least 13 times gross. So at 13 times gross, you're looking at a stabilized market value of about $1.06 million. So in addition to getting this property to break even, essentially, once you get it up to market rents, you're also adding $110,000 of equity by doing this project, which turns out to be a 36% return on your money. So not a bad investment for somebody who's looking for something in a nice area, wants something that they can buy and hold and add a little bit of value to. So overall, I'd love to hear what you think about this deal. Is this a property that you would consider investing in? I'm trying to do these videos more frequently, so if there are any properties out there that you would like me to analyze, please feel free to send them my way. And remember to like and subscribe, and thanks so much for watching. Remember, invest well, trust Cody Charnell.